Welcome back. I'm Pratap here. Today is the 3rd December 2024. In this video, let us evaluate the performance of the high liquidity zones generated in the previous report. Even before that, all of you please understand we are providing complete free training on supply demand zone price action. All the training lessons are available at our NeoStock homepage. At our homepage, you please click on the tab posts. Some of you might be seeing the tab community. Click on the tab. Then you get access to our free training course. This post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into the playlist supply demand zone price action course. Here you can find all the training lessons. You just need to start your training from lesson 1.1. For that you need to scroll down to the bottom of the page. Here starting from lesson 1.1, all the training lessons are placed in an order. Please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this video description. Please join at our Telegram channel. It will be helpful to you. And also each video we release or any important updates we will be providing at our Telegram channel. Now let's get into the analysis discussion. Before we look into the high liquidity zones generated in the previous report, first let us evaluate the POWERGRID Corporation that we discussed in lesson 27 few days back. The last Sunday I have released the video, and yesterday you have seen it entered into the zone and reached the target at the pro gap area. At the time it created a rally base drop 15-minute zone. And today again it entered into the zone, gave a trade, and again it reached that pro gap area, whatever the zone is there, 15 minutes. Till then it reached. So that means whoever completed lesson 27, yesterday you would have got the first trade. Today you would have got the second trade. How much profits you would have earned? Maybe the risk of the zone is high. Obviously you will be using position sizing. That is what we discussed yesterday HLQ analysis video. Those who have taken cash trade, probably you can take position sizing, and F&O traders, if you are taking few lots, position sizing may not be possible. But if you want to take a trade, you need to take a deep entry until you get up to 2% maximum allowed risk. You can fine tune. Yesterday it's not possible for you. It didn't enter. Today, if you would have fine tuned, F&O traders also would have got a trade today. Look into this blue color line I have drawn. With that entry till the stop loss, you probably add some stop buffer. Till that stop buffer, you get a 2% risk. It is within the 2% risk area. Almost 2% risk accepted level. You would have got a F&O trade today. And when it reached this blue color line, today at 9:45, 15 minutes candle, if you exactly look into the 1 minute candle, here you would have got the trade. The prices stayed here for about 2 or 3 minutes in this area. This is at morning 9:48 candle or 9:50 candle or 9:51 candle. You would have got a trade, F&O trade. Because prices went deep. And with this level, you will be able to achieve your trade within the acceptable risk. And finally reached up to here. Do you know how much profit you would have got today from this trade? Your target, what is the target? 330, 130 paisa. Let's calculate how much profit you would have got if you would have taken this trade. This is 325.05 paisa. 6 rupee, 25 rupees profit you would have earned. What could be, what is the lot? Yesterday we have seen 1800 is the lot, right? POWERGRID. Zero the margin calculator. POWERGRID. POWERGRID December 1800. You would have got 11,250 rupees profit. What could be the ROI? Morning when price reached at this level, it is 1,11,000 rupees. Now price has moved up, it is increased to 1,11,000. Now it moved to 1,12,793. So 11,250 into 100 divided by 1,11,000. You would have got 10% ROI during the intraday itself. Actually, this is a short-term trade, not an intraday trade. Short-term trade. Till this pro gap area. Our target should be till the pro gap area. That's the trade plan. You can hold this trade for even 1 or 2 days until it reaches this area. But today itself it reached. That means we saved our capital. You might have exited your trade and same capital tomorrow you could invest in some other stock. Why we are targeting this pro gap area? Because institutions, they are very clever. Because this is our trade plan. Actually, this is a bullish trade setup. Bullish trade setup as per zone confluence and EMA confluence. Which zone confluence? LTF and ITF, daily and weekly zone confluence. And this weekly zone is having weekly EMA confluence. That is what we discussed in lesson 22. You learn the strategy, zone confluence and EMA confluence. Because it met that condition, this daily zone, inside the weekly daily zone, you should plan your trade. So this is the area we should plan our trade. Either you can take type 2 proximal entry on the daily zone. If the risk is higher, you can fine tune at 75 minutes level. There you can take a trade. If risk is still high, you can again fine tune 15 minutes level. You can take a trade. And also this zone is having fine tuned order flow. That means that is indication this is zone having a strong institutional order flow. That's why we are planning our trade somewhere here. Either somewhere here or within this 15 minutes fine tuned area. So prices will be reaching, but before that, this area strong order flow is there inside the weekly zone. This is not a fine tuned zone. That is what we discussed. This is the aggressive trade setup. We have a 15-minute zone and a 5-minute zone that is having daily EMA confluence. That's why this is the area strong order flow is there. Until this is violated, you can plan your trades. Definitely you can't plan the next trade. It is a risky next trade in this area. The reason is prices already reached deep inside. Next time there are higher chances this zone will be violated. It has to be violated. Then only prices enter into this area and we get the bullish trade. For MIT trade we will get bullish trade setup, MIT trade as per zone confluence and EMA confluence strategy that I explained in lesson 27. But meanwhile, this is the area gave us a short-term trade opportunity or intraday trade opportunity. Yesterday we got the opportunity, but you have to take the trade as per the position sizing. Today also as per the position sizing, you can plan the trade. But F&O traders, if you want to take, you need to take a deep entry. That is the deep entry. I have drawn this blue color area. That blue color area, see morning daily, why it is looking more deep in the daily chart is daily chart, they are adding even pre-market. That's why see in pre-market is started here. But intraday, that is intraday trades from 75 minutes or 5 minutes candles, they actually calculate the candle open from 9:15 candle. But pre-market is at 9 o'clock, 8 minutes or 9 minutes it will start, right? That market open. That reflects on the daily chart, but that won't reflect on the intraday charts. So that's why 15 minutes, a 9:15 candle. This is the price you are seeing. But pre-market somewhere below this blue color line. But anyway, this blue color line, why I have drawn? This blue color line facilitates a trade opportunity for F&O segment. Because if you calculate the whole risk, you can't position size in F&O unless you are a trader, take some 10 lots or 15 lots. At the time you can do position size. But if you are taking 1 lot or 2 lots or 3 lots, you can't position size. That's why you have to take deep entry. Yesterday also, you F&O traders might expect a deep entry. They might have missed yesterday. But today, luckily exactly at that area, some 5 paisa below that blue color line, prices went and then sharply it moved up and finally reached the target. When it reached the target, maybe at 13:45 candle it reached. You got entry at 9:45 candle. If you exactly look into 5 minutes candles, yes, at 9:45 candle it reached, and somewhere at 13:45 candle it reached. 13:45. Almost 4 hours we will be in the trade. That is what short-term trades. Sometimes you need to wait even 1 day or 2 days to get this ROA, because it is a bullish trade setup, and also it is currently supporting a zone confluence and as well as a EMA confluence. In such kind of trade setup, order flows are very strong. Moreover, in this area, even though it is a aggressive trade setup, EMA confluence is there in this area. That's why it worked very well. So expecting one more trade is not good, because I told you already prices went deep inside the zone. Next time there are higher chances this zone might be violated. It may violate, or maybe some more deep it will come and again it will move up. That possibility is also there. But we can't risk this time. People who took the trades yesterday and today, you should be happy with this in this zone. That is good enough for us. It gave you 10% ROA already intraday itself. Actually, you are supposed to get this ROA within the 2 to 3 trading sessions. Luckily, we got during the 1 day itself, within intraday itself we got. Actually, this is not an intraday trade. This is a short-term trade. But luckily we got it reached the target within the intraday itself. Same thing happened yesterday and as well as today it happened. This is about POWERGRID. Next, if you look into Nifty, it's not in our HLQ zones today, but the previously what we have seen, the lower time frame zone as an horizon to the higher time frame, and finally it is violated today. But before that we got first trade, second trade, third trade, fourth trade opportunities. Today also morning it reached and it gave some move, but that is not good enough. Let me show you in the 5 minutes charts. So here today prices started here and reached this 15 minutes. Actually here you have a 15-minute zone is there. It will be clear in the 15 minutes chart. Here drop base. This is not actually a rally candle, this is a drop candle. But why I am drawing is, if you add the hidden body, still this is not a good 15-minute zone. But 5 minutes we have clarity here, because good gap is there. If you add the hidden body, you will be getting a good rally up to here. Green candle you will get. But finally, this is the area. But you can't plan a trade because the ROIs is not there today. Even if you would have planned, your trade would have been stopped out today. All these days we enjoyed. Because the day when it violates, it will be. Because today it got the expiry date. Because it is violated, we are saying today is the expiry date. But otherwise, we never know when it will expire. But one day it has to be violated. That happened today. But before violation, whatever the remaining pending orders in this zone, it pushed. But this is not good enough to get the profit today. That is what you have to understand. Because 5 minutes point of view, institutions kept a pro gap. There is a pro gap. Market opened with a gap up. Until here open. This is the open area. Until here again prices were moving. Until here it captured all. By the time this entire supply has been consumed, now the remaining demand pushed the market. And by the time it consumed all the supply till this area, now easily it is violated. See, institutions, what cleverly they did, they know that within this small area some order flow is there. After rally, there was a base candle was created. This is the area institutions kept a new strong order flow and then pushed. This is the area we can plan our trade, because this is the area actually having a strong orders they kept to remove this entire supply within this area. This area supply is very strong. So to remove that supply, definitely institutions keep strong order flow in this area. They would have kept a very strong order flow. See, price retraced here. This is the area you need to plan a trade. Intraday traders, this is the area you should plan the trade. When it happened at 12 o'clock 25 minutes. See, after that, see the push. And what is the value here? Maybe you need to add some entry buffer here, because the order flow is very strong. Somewhat it could have been spread a little above. Reached up to here. Why I am saying this is the strong order flow? Because this is the zone responsible for the violation of this entire high liquidity area. Of course, still there is a strong order flow is there in this. That's why a base candle is created. That means a fight happened between institutions, buyers and sellers here, within 5 minutes level. Already this is the LTF zone. Strong order flow will be there. The remaining order flow, it has to be violated, means some strong order flow institutions also should add in this demand. That's why it is violated in the next candle. After that they move and retraced back, and again it moved. While retracement, probably the value is around 24,380. Say 24,382. Until here it reached. How many points it moved? I am just checking. So around 60 points move from here to here. Sorry. Almost 100 points, close to 100, maybe around 95 points from here to here. The zone pushed up to 100, close to 100 points, around 95 points. That's a good move for intraday traders' point of view. At 2 o'clock, 20 minutes time period. Obviously, intraday traders has to exit at that time. Profit booking will take place. That's why some movement within this area. This is how you should understand the charts. Okay, now let's move on to the HLQ zones generated in yesterday. 4 HLQ zones are generated and none of the trades are executed. Strictly speaking, one zone is executed during the last 5 minutes of the trade market closes. RBL Bank. So you can't plan any trade. So in this candle, the price is entered. But before that, some price action. This zone entered and again pushed again entered, again pushed, and now because institutions keep on adding demand and finally slightly pierced this zone. Now you can't use for future purpose, this zone can't be used. But anyway, trade also you can't plan anything because this is the last 20 or 25 minutes of the market closes. But otherwise we didn't get any trades from today's HLQ zones. But study point of view, let us understand how we fine-tune these zones. First of all, what kind of zone? RBL Bank. This is a daily high liquidity supply zone. How I fine-tuned? Let me explain. Drop, base, drop. See, the why I am explaining the fine-tuning is this is mainly to help the beginners or learners. Need not be beginner, those who completed the course and probably last 6 months you are observing still, even last 1 year you are observing still, lot of learning will be there for you. Because perfection is very important. And you get perfection by listening these HLQ zone analysis videos on every day. At least you should spend some 30 minutes to 45 minutes to listen these videos. Because every day you gain some experience. These videos are not for learning point of view. These videos are for gaining experience point of view. Because these are the practical zones. So how we are fine-tuning, how well we are fine-tuning, understanding is very important. Some zones are very clean and neat. Perfectly, even the person who just completed course also can draw the zones. But some zones may not be like that. Some zones might be looking tricky. Decision making might be not easy to draw the zone or not to draw. So that's why if you listen, at least how I am fine-tuning the zones, you will understand. Okay, this is the daily zone, fine-tuned with 75 minutes time frame. Here you have a 75-minute zone, rally, base, drop. And this drop, base, drop is LOTL, this result of the sale. So this is the origin. So that's why always I focus on the origin. Origin will be having higher success rate. This rally, base, drop is the 75-minute zone. So within this 75-minute zone, the 15-minute zone is there. Here you have a rally, base, drop, 15-minute zone. And here also you have a drop, base, drop, 15-minute zone. This is at the distal line. See, this is not the LTF zone as an origin because this is exactly at the distal line of this zone. Exactly within the zone it overlapped. It didn't go beyond outside the zone. Okay, so we have two 15 minutes order flows, drop, base, drop. Sorry, I made a mistake here, something. Because RBL zone is a daily zone, right? Here 75-minute zone is also available. I didn't draw that. But this 75-minute zone is origin. Why? It moved outside the zone. This 75-minute zone, drop, 3 base candles and again a drop. This 75-minute zone is the origin to the daily zone. This is the mistake I did. I didn't draw this. But remaining fine-tuned zones are part of this daily zone itself. Okay, now let's go to the 15 minutes time frame. In the 15 minutes time frame, you have drop, base, drop. This is exactly within this daily zone only. See, this is the daily zone. So at the daily distal line, it didn't go outside, but 75-minute zone went outside the zone. Okay, and now let's fine tune with the 5 minutes time frame. So here you have a rally, 3 base candles and a drop candle. Rally, base, drop. And then follow through candles. Here also you have a drop candle, two base candles, and again a drop candle. So these are the two fine-tuned 5-minute zones. And the first one, see, earlier prices came near. That means a strong order flow might be there. But today, because last half an hour, maybe institutions might have removed their order flows from this zone. Whatever it is. That's why it is pierced. It's not violated, but pierced. Pierced means it is as good as order flow is gone. It is equivalent to violation only. But there was some resistance from this zone in 15.5 candle, 15.10 candle, and 15.15 candle. This is just before closing of the market. And finally, the last 5 minutes candle, the zone is pierced, and finally price is closed. But this zone can't be used for future purpose because the order flow is gone. Pierced zones generally we use for reference whether there are any other zones above this zone or maybe lower time frame zones which might be having strong order flows. For that purpose, we will be using pierced zones. Anyway, you will be having a separate training session in the coming weeks about pierced zones. That is also one of the strategy I have to explain to you. I already made a video 1 year back about pierced zones. But an overview I have given, but in a detailed way we have to discuss in our training course. Okay, other than this, we didn't get any trades from today. The first one is the next one is HDFC Life Insurance. This is a daily high liquidity demand zone. Let me go to the daily time frame. See, here we have a rally, base, rally. This daily zone is fine-tuned with 75 minutes time frame. In the 75 minutes time frame, I took this is a large candle but failed ERC candle, so I considered this as a leg-in. And then not only this, there another way also, see here, add the hidden body. The moment you add the hidden body, up to here it will get the body, but still large candle. But either way, this is the leg-in. You have 1, 2, 3, 4, 5. This medium size candle part of the base. So total 6 candles are there part of the base, and this is the leg out. This is the 75 minute zone. Inside 75 you have a 15 minute zone, a fine tuned 15 minute zone. Here you have a fine tuned 15 minute zone. See, this is a failed ERC candle. Dynamic view, it is a rally candle. Leg in, you have 2 base candles and a rally candle, follow through candles. And this is the area you have 2 order flows are there at 5 minutes level. Go to the 5 minutes time frame. Here you have 2 order flows. So here you have a rally, 2 base candles and a rally. This is one order flow. And again you have a rally, 2 base candles and a rally. And previously prices came near to this zone once, but they didn't give you a trade. Maybe a strong order flow might be there in this area. That's why before reaching the zone, prices started moving up. Definitely next time you can plan a trade in this zone. In case if this zone is violated, the one below, immediately you have to plan a trade. In case if the first one is violated, you can plan a trade from the second one. Actually, both looks like LOTL zones because the gap is very, very small between the zones. But today, we didn't get any trade opportunity. If you feel both are LOTL, almost LOTL zones, because when you want to go for stop loss, the stop loss could be within the second zone. So you can't exit. At the time, risk will be very high. If that is the case, avoid the first one. Sometimes you might be having confusion. But if prices touch the first zone and move up, you will be missing the trade. That is a risk point of view, I am telling you. We can't do anything in that regard. Or you do position sizing. Don't take trades in F and O, take in cash segment and do the position sizing. That way you can plan the trade. RBL Bank, we discussed Reliance. Reliance also a daily daily high liquidity supply zone. Okay, here we have this is rally base drop, or maybe this is rally three base candles and drop. Yeah, this is the rally, these three are base candles and a drop. This is how our software identified. And this again I fine tuned with 75 minutes. Here you have drop, two base candles and a drop candle. This is a fine tuned 75 minutes. And also at the distal line, this is the zone, right? At the distal line, there is a 75 minute zone overlapped. Rally base drop. This 75 minute zone is the origin for this daily high liquidity supply zone. 75 minute zone is the origin. But you need to fine tune with 15 minutes and 5 minutes levels. Of course, this is also you need to fine tune. So let's move on to the next time frame, 15 minutes. So we have two order flows at 75 minutes level. One is the origin and another one is fine tuned zone inside. Both are fine tuned zone, 75 minutes. But this is as per the concept LTF zone as an origin to HTF zone. But this is overlapped inside the zone, within the zone. Okay, here again you have a rally, three base candles and a drop. This is the 15 minute zone. And here you have a rally, two base candles and drop. This 15 minute zone is the origin. Actually, this 15 minute zone is playing the major role. Okay, of course it is having a fine-tuned 5 minute zone also. This is also having. So let's move on to the 5 minutes time frame. In the 5 minutes time frame, here you have a drop, three base candles and drop. Let me hide this large candle, then you get clarity on the candles. See here. Now you have a drop, you have three base candles and then a drop candle. And in this origin, 75 minutes origin, we have 15 minutes fine-tuned zone. That is also origin to daily high liquidity zone. Now this 15 minutes origin is having drop base drop. And this 5 minute zone again origin to this entire daily zone. If you delete all these zones, you get better clarity. See here, this drop base drop, this 5 minute zone is the origin for this entire daily high liquidity zone. It picked up the orders and then entire move is started towards down. So obviously this is the area you might be having a strong institutional order flow. This comes under concept, lesson number 22. LTF zone as an origin to HTF zone. But this is lesson 16 concept, fine tuning the zone up to the 5 minutes levels. So these are the order plans, but unfortunately today we didn't get any trade. See, this is today's candle, Reliance. They didn't end, let me go to the daily. So this is today's daily candle. Price just touched the zone, but they didn't go inside. And the last one is Asian Paints. This is a 75 minutes high liquidity demand zone. This is the one identified by our software. This is a drop. Oh, no. This is the drop. This is the leg-in identified by our software. This is the leg-in, 2 base candles and a rally candle. That's why the high of the candle is up to here I have drawn. Drop, base, rally and follow through candles. And this 75 minute zone, today prices entered, but they didn't enter into this fine-tuned area. How I fine-tuned? Let me explain. Go to the 15 minutes time frame. Here you have a drop, 3 base candles and a rally candle. And here the price structure is not very clear to draw the 15 minute zones. Not comfortable here. It looks like a big leg out candle is there, but also here big drop candle is also there. So that's why this is the right area. And this 15 minute zone we need to fine tune. But the 15 minute zone order flow is not really good here. But where they are picking the order, here we identified an horizon. Drop, base, rally. This is the 5 minute zone as an horizon to this 15 minute zone. Of course, this is also a fine-tuned zone, but fine-tuned at the distal line. But what kind of fine-tuned zone? So this fine-tuned 5 minute zone is acting as an horizon to this 15 minute zone. Because the orders are picked up from this zone. See, multiple times, multiple candles picked up the orders from this zone. This is the first time they picked. Maybe this is also might be acting as a high liquidity zone also. But anyway, this is the area we have the real order flow is there. Until this is violated, we can plan our trades in this area. But today, prices did not enter into this area. But below this zone, I have also seen one more zone, 5 minute zone, drop, base, rally, already picked up the orders and picked up the orders second time. Maybe this could be a high liquidity zone. There is a chance that this zone can be used as a bear trap by the institutions because it is there just below this zone. There are higher chances. If this horizon is violated, then this might be providing the support, this zone. And another thing is when this horizon is violated, because you take long trade here, it is stopped out. The moment it is stopped out, you go for short trades here. And all our short trades will be captured by the institutions because they get a very good liquidity from our side. Because we are exiting our trade, our stop loss is hit. So institutions will capture. It looks like we exited our trade and after that price entered and again started moving up. We all will be thinking why again prices are moving up after we exited the trade. The reason is there is a bear trap. All our short trades are nothing but bears, bear orders. So all our orders are captured by institutions. That means they trapped us, institutions. Where they trapped in this zone. That's why we call it as a bear trap. Anyway, I explained all these concepts in lesson 21, bull trap and bear trap. So because multiple times this zone is tested and also prices are moving strongly from this zone. So I am sensing this could be a possible bear trap. So this zone is having an horizon and also this zone is having a bear trap. But unfortunately today prices didn't reach up to our horizon level. So that's why we didn't get any trade. So these are the high liquidity zones generated from our previous report. Hope this information will be useful to you. Let's all meet again in our next video. Thank you.